U.S. economy and our current cycle of deficit spending and rising national debt.
America has a $31 trillion debt, and Washington is on the clock.
Why are we bankrupting our kids and grandkids? Why are we digging the hole deeper and deeper and deeper?
This is the most predictable crisis in American history.
The national debt today is $36.2 trillion.
Basically, we're on a path to bankruptcy. America's on a path to bankruptcy. So we have to cut government spending.
Our economy would have been thrown into recession. Retirement accounts for millions of Americans would have been decimated. 8 million Americans would have lost their jobs.
Wait, please. Stop. Why is everyone around talking about the U.S. national debt? Is it really that serious? Why am I hearing this since I don't have any debt? Is the American Titanic really going down and the U.S.A. as a modern empire will collapse in the near future, repeating the fate of ancient Rome together with the Spanish Empire? Or maybe it is manipulation of some politicians, exaggerations of the media to raise ratings or distraction. In simple language, understandable to school children, are going to figure out what is the U.S. national debt in general, who benefits from it, how serious it is, and what awaits the U.S. in the near future, bankruptcy and the end of the empire, or the continuation of normal life. When the average person goes into debt, the bank calls him. When the government goes into debt, it prints bonds. The extravagant billionaire, Elon Musk, regularly raises the alarm over rising debt and the burden of interest payments, calling the situation frightening. Just the interest on the national debt now exceeds the Defense Department spending. If this continues, the country will become de facto bankrupt. America simply cannot sustain this level of debt.
Basically, we're on a path to bankruptcy. America's on a path to bankruptcy. So we have to cut government spending or we're just going to go bankrupt, just like a person would.
Scott Bissettin, Minister of Finance, said, if there is no agreement on the debt ceiling, the country could default as early as the second half of summer 2025. It could be the biggest crisis since 2008. Is that a big deal? Well, not at all. The U.S. debt ceiling is the maximum amount the government can borrow to cover its expenses. This limit is set by Congress. If the debt reaches the ceiling, the government cannot borrow money until Congress raises the limit or suspends it. That is, a temporary lifting of the ban that allows the government to borrow. The limit will be suspended in the same way it was suspended in 2023. This is not the first time this has happened in U.S. history. During World War I, Congress did not have time to approve every bond issue. Then they introduced the concept of a national debt ceiling so that the government would not need approval for each new issue. Since then, there have been 102 debt increases or suspensions. Since 2013, there's been a debt ceiling suspension passed by Congress almost every year. How much does America owe, and to whom? Let's first understand how debt is created. As mentioned above, the government borrows money to cover the imbalance between government spending and income. To do this, the Treasury Department prints securities and puts them up for sale. They differ in terms of maturity and interest. The interest rates of treasuries fluctuate. They depend on inflation, supply and demand, investor expectations, but mostly on the Fed's benchmark interest rate. That is, the higher the Fed funds rate, the higher the interest the government has to pay on its treasuries. Why is that? Well, because the Fed sets the price of money in the economy. The higher the rate, the more expensive the price of credit within the country. Accordingly, it is profitable for banks or investors to lend money. If the interest on government bonds is lower than the Fed rate, it is not profitable for investors to buy government securities. They will borrow money. By this, in order to sell its securities, the government has to keep up with the Fed funds rate. For this reason, Donald Trump has clashed with the head of the Fed, demanding that he lower the rate.
Energy's down and interest rates are down. Everything's down. And the interest rates, the beauty there is when we refinance debt, debt's become such a big factor in this country. We're going to start paying debt off with tariffs and other things. But it's such a big factor because the interest rate's so high. Well, now that's coming way down. So our budget's going to look a lot better because interest costs are way down. And I guess I've done that.
Interest is super important. Let's imagine a debt of $1 trillion. Given the current average interest rate on treasuries of 3.3%, that's a plus of over $30 billion in payments. In reality, it's much worse. Let's paint the big picture. At the moment, the U.S. national debt has already exceeded $37 trillion. The holders of the debt are the Fed, which buys and then sells treasuries to regulate the money supply in the economy; foreign investors, governments, foundations, or private investors; domestic investors, banks, pension funds, insurance companies, and individuals; state governments; intergovernmental funds. The federal government borrows free money from its own funds like the Social Security Trust. As you can see, foreigners make up only 22%. In recent years, this share has been declining. China, as well as Japan, are reducing the number of treasuries, which is a pretty bad signal. The most interesting thing is that the largest share of holders is held by domestic investors, 37%. And if we add to this the debt to intergovernmental funds, it turns out that about 59% of all debt is held by Americans. So Americans owe themselves? It turns out yes, but there are nuances. Unfortunately, there are no exact figures on the holders, as the U.S. Treasury Department does not publish data on specific funds or private investors. Based on indirect market estimates, we can assume that the main private debt holders are investment funds such as Vanguard, BlackRock, and others. The absence of official information on how much they actually own only inflates conspiracy theories. According to various estimates, private funds own about $4 trillion, or 9 to 11% of total U.S. debt. They are followed by banks like J.P. Morgan and Bank of America with a share of $3 to $3.5 billion, or 8% of the debt, as well as pension funds, insurance companies, state governments, hedge funds, and individuals. As we can see, the majority of domestic U.S. debt is held by investment funds and banks. Would the statement, "Americans owe themselves," be correct? The answer should probably be given by the Americans themselves. The budget deficit is projected to be about $1.9 trillion by the end of 2025. To understand how serious this is, take a look at this graph. It shows the evolution of the budget deficit over the last 25 years. And this graph shows the U.S. budget balance since World War II. To be fair, there have always been budget deficits, and surpluses have only been achieved a few times in history. But it's the trend that matters and the size. As you can see from the chart, the deficit is snowballing, and with it the debt. It resembles a vortex of disaster from which it will be impossible to get out. The 20th century was a century of ambition, turmoils, and tremendous growth for America. The country built railroads, won and lost wars, and flew into space. But behind every new step was a trail of national debt. At the beginning of the 20th century, it was about $2 billion. By the end of the century, it had grown 2,700 times. The major periods of debt growth were the two world wars, the Great Depression, the crisis of 2008, and the pandemic of COVID. But if with the debts of the first half of the 20th century, the booming American economy easily coped, the debts of our time have become an unsustainable burden, dragging the country to the abyss. Take a look at this graph. That's the 20th century growth in debt to GDP. The border of 100% of GDP was first crossed during World War II. But for America, which came out of the war victorious and became a world leader, it was not difficult to pay off its debts. The graph shows that the rapid growth of debt began after 2008. In 2012, the debt reached 100% of GDP for the first time since World War II and has not fallen any further. In 2020, the debt broke through the ceiling of 130% of GDP. If the U.S. really collapses, historians of the future will probably say that America was ruined by the 2008 crisis and the subsequent COVID pandemic. All the charts show a lightning-fast growth of debt from that very point, after which the debt began to grow like a snowball. Because of the growing budget deficit, the debt is also growing. In 2025, the government will have to pay $952 billion in interest alone. I'll make it clear that the U.S. is not even paying off the debt, only the interest. When it comes time to pay for the treasuries sold 10 years ago, the government just prints new treasuries for that amount, while the interest payments grow like a snowball. Consequently, a chronic debt arises when the government, in order to repay the old loan, borrows again. At the end of 2025, the debt is expected to be 124% of GDP. That means the entire country already owes 24% more than it earns. Technically, that's impossible to pay off. So why isn't the U.S. still bankrupt? Why are the treasuries still being bought, including by foreign governments? Well, the fact is that the U.S., and more specifically the Fed, is able to print dollars unlike other countries. Technically, bankruptcy is not possible as long as the debt is denominated in dollars. When the Fed buys government paper, it prints money out of thin air to help cover the debt. But printing new money will lead to inflation, won't it? Yes, but there are nuances. First of all, the U.S. finances its debts only partially by printing money out of thin air. Let me remind you that the Fed owns about 13% of its treasuries. Second, global world trade is conducted in dollars. Many allied countries, such as Saudi Arabia for example, are obliged to sell oil for dollars. As global GDP grows, the demand for dollars to service global trade grows too. As we all know, the U.S. has a chronic trade deficit. That means the country buys more goods than it sells to other countries. And that actually makes a lot of sense. The excess money that was printed to finance the debt is quickly siphoned off abroad in exchange for goods, preventing inflation from breaking out inside the U.S. As a consequence, the U.S.A. has the ability to print unsecured dollars to cover the debt, while the growing economies of the world need new dollars. Thus, the dollar has not yet depreciated, and U.S. government bonds are still being bought around the world. In the second place, the demand for the dollar and for government paper is held on faith. This is actually true. 60% of the world's foreign exchange reserves are held in the dollar. Treasuries are considered the most reliable asset in the world, as well as the most liquid, which allows foreign governments to use them to stabilize their own currencies. Plus, they don't generate a bad return. Investors simply believe that the U.S. is still able to pay its debts. But this cannot go on forever. The pyramid has to collapse at some point. Then the faith will disappear and the whole thing will collapse. Let's look at future projections. The main problem with America's debt, as you have already realized, is the budget imbalance. The U.S. budget has been in deficit for over 20 years, with the last surplus recorded in 2001. The One Big Beautiful Bill Act passed by Congress on June 4th will have a significant impact on the debt. Despite positive projections by the White House that the new law will reduce the budget deficit by $2 trillion through GDP growth and $1.6 trillion in spending cuts, primarily Medicaid, independent experts are not so optimistic. The Independent Congressional Budget Office estimates the bill would add about $3 to $5 trillion to the national debt over 10 years. The law also raises the debt ceiling by $5 trillion to avoid default in 2025. Economist Ray Dalio argues that a crisis is likely by 2035 if the budget deficit is not reduced to 3% of GDP. Recall that for 2025 the deficit is about 6%. Given the rapid aging of the population and the increasing spending on Medicare and Social Security, the deficit will only grow. As horrible as that may sound, it's just math. Unless some economic miracle occurs in the near future in the form of a technological revolution that would allow the U.S. GDP to grow faster than the debt is growing, collapse is almost inevitable. Experts say that given the current dynamics, the U.S. debt will increase in the coming decades. But when will it crush America? Economists call it the bifurcation point, the moment when the government will not be able to pay its debts. At the current rate, that could happen in 10 to 20 years, when the debt reaches 175% of GDP or more and interest payments are over 6%. Then the printing press will be started, the dollar will start to depreciate, other countries will stop using the dollar as the world currency, and investors will stop buying treasuries. This will be accompanied by market collapses incomparable to the 2008 crisis, hyperinflation, and hence a U.S. default. If the Fed raises rates 6 to 7% to fight inflation, interest on the debt will reach 6% as early as 2030. The Congressional Budget Office predicts that the debt will grow to $50.7 trillion, keeping the ratio to GDP at 122%. However, the International Monetary Fund gives more alarming projections. They say that debt could reach 134% as early as 2030 and could pass 140% of GDP by 2032. Long-term estimates are grim. By 2050, the CBO expects debt to soar to 180 to 200%, nearly double the size of the economy. This level of strain was seen only during World War II, but then the U.S. economy grew at an average annual rate of 3 to 5%, which allowed for a rapid reduction in debt. Now the Fed's GDP growth projections are only 1.8% per year. Optimistic scenarios suggest that economic growth above 3% per year, as projected by the White House, could slow the debt-to-GDP ratio. But experts, including 6 Nobel laureates, call such projections unrealistic, pointing to structural constraints such as declining labor productivity and demographic changes. If the world is hit by new crises in the form of new epidemics, economic crises, or wars, these processes of the decline of the United States will accelerate, as it was in 2008 or 2020. Some people, called as supporters of conspiracy theories, claim that the only way out of this situation is a big war or other catastrophes on a global scale, which would allow to cancel debts due to force majeure, resetting the meter. Whether this is true or not, no one knows. But it looks like the world is in preparation for World War III.